everybody. How's everyone doing today? How's it going in face? Okay, let's have a good day. Let's start off with crude here. So there was this candle yesterday after, I don't know if it was the API, but there was a nice drawdown and supplies. And as you can see at new highs, we are diverging here on the 1 hour. And on the 4, it's not ideal, it's a little above 70. But the real reason I'm taking a shot here, despite all the bluster and geo risk, is this confluence of these moving averages right here, the 50 and 200 right here. So I think it's going to have trouble. The 50 comes in 59.03, so we didn't get there yet. Still could, but to me it looks like we could be setting up for some type of pullback to 57 and maybe back to, a lot of people were keyed on 56 as being where the crude kind of really turned good. And I have a couple of speed lines I'm working with here that comes in at 56 and 55. So we'll see. We'll see if what the crude's made out of. There, it is risk on a bit today with S&P's up 12. Also, I think this is significant. I was talking about the yen yesterday, and as you can see down here on the 4 hour, this is the 2 hour, we diverged. The 4 hour, it was pretty clean right here. And I'm looking for a rally back towards 108.5 or so, which would be the 2-week off number, which all you do is you count back 2 from this week and you look at the close. And that comes in at 108.56. As you can see, it's only midweek, but we are getting a reversal week back above the 61.8 level. I thought there was a shot of going to 78.6 as well, but yesterday's close was enough, I believe. So this is going to be the pretty important level up here at this 108.50. Then I think we could see 109, and I'm actually eventually looking for this gap to be filled. So with this going on, yields are up, and I was talking about TLT at 133.5. I thought we were going to get it after yesterday's close, but I don't think that's going to happen now. Yields are heading up a little bit here. Pretty good divergence on the 10-year. We didn't quite take out the lows, and as you can see, the long end has a even more constructive level. It's not as close to the lows. It could still do it, give us a 3 drive. It won't confirm down here. But I've done some research, and this may not be, you know, the high. I did some work, and some Elliottians say we can bounce for a 4, maybe back to 217, 220, and then they're looking for 170. So we'll see. But TLT, so I've lowered my expectations for a decline on TLT. As you can see, it looked like it was going to try and make another move for a 3rd drive, but with this opening in yields, maybe not. I'm looking for a shade under 130 back to this throwover line. I think that's, you know, that'll be it. It'll have to close underneath that for, you know, me to declare a top. But I think we could get a move back to the throwover, the top of the wedge line anyway. So I'll be looking at that. And, you know, all the precious metal bulls, you know, if you like gold at 1440, you gotta like it here at 1404, right? So I guess the question is, how far do we pull back? You know, it's kind of an ugly week if we keep going. We can't take out 1373, or this was just one big phony false breakout. So there's a line in the sand. Silver's been weaker except for today. Gold's performing better to the downside, but you know, silver actually looks like it could make another move. But back under this 1520 level, you know, then you're talking 1490, 1480. So while gold was screaming, we had a failing rally in the silver, and that was a preferred short because, you know, gold was ripping bears' faces off, and gold ended up paying better. But the conservative thing is always to sell the weakness. So, you know, with this going on, and I've been looking for this for a long time, let's look at this gold silver ratio here. You know, I think it made new all-time highs with what gold did here. Okay, there's a 4-hour. There's a daily. Yeah, new all-time highs and giving it back. You know, I don't see anything RSI-wise to tell me I don't see any divergence except for some shorter-term stuff on the 1 hour, but 4-hour looks like a confirmed high. And the daily looks like a confirmed high, so maybe it's just a pullback and another thrust. I don't think we get a major top in this until we start seeing some momentum divergences. Everyone with me? Good morning, Claudia. You've been watching that too, Joe? Okay. Hi, Forex Gal. Olivier. All-time high in what? Okay. Good morning, Hamid. How are you? All right. So the only other thing I want to cover is Dixie. So I was looking for 96.80 yesterday, and all it did was it missed it. I think 84 was a low. Yeah. So the low was 84. I think we're headed back to 96, 60, maybe 97-ish for another sale. But I think there's more left. There was no real good reason RSI-wise here either, except on the 1 hour. It was pretty glaring down here. So we get through this 640 level, could take us up to 680 to 97. I think that'll be your next dollar sell. 1350. Okay, thank you. S&P 500. I'm just trying to be patient, Glenn, waiting for the 3,000 number, 3050. So I'm not sure this was it. Kind of weak are we having? Yeah, it looks like an inside week. So ideally, we'd have some type of blow off. Maybe it happens. I think the G20 is over the weekend. So, you know, if they could put together a story of a trade deal or a continuation of talking, the most bearish thing the S&Ps could do if this range holds is to take out this week's high, last week's high, and then start trading lower on the week. Does that help? Okay. All right. How are you today, Blake?
It's pretty slow out there.
Yeah.
Yeah, it's this is a consolidation day, you know, just kind of everything's slow. Equity markets are a little higher based on Mnuchin's comments overnight. You know, and the guys in my office don't think he said anything new, but you know, he basically said we're 90% there with China. So that's what's kind of got the market, you know, the bulls out this morning. You know, like I said, it's been pretty quiet, and right now I'm looking at just some consolidation in the market, and I like where the euro has been pivoting. I'm actually looking to buy some euro this morning. I bought it yesterday at 113.54, and I sold it at 82. So during this spike right here. So as it dropped down, I've got long, pretty big size too.
That was Powell, wasn't it?
Yeah, and
Okay.
and yeah, and I got long right around here, and I spun out of it right around here, and I was like, okay, well, my day is done. Um,
You
and
contrarian, you
well, you know, I'm
fading
just
tall.
trading with the direction of the trend, and this is the
Yeah.
breakout point. It's very technical, and that's the
All right.
thing I like about the euro right now. And I think that this, if you look at the hourly here, this is, and let me drag this over here, and then I'm going to draw this like so. And I'll say that this between 113.30 and 113.50 is really your buy zone. And I think it's possible we get there. But at the same time, I have to say the pullbacks have been very minor
Yeah.
and they've been very shallow. So when you have very shallow pullbacks, what is the risk, Dale? What do you think?
Yeah. It's working off overbought conditions more in time than price. So
Yep. And
that's
then
constructive.
that is constructive, right? It's constructive if you're bullish, which I am.
You know
So,
what else is shallow?
huh.
Stelios's new pool. So I warned warned him not. I know why there's not a diving board on it.
Yeah, yeah. Let's not in his wading pool. We're not going to do any
No,
dive.
it's bigger than a wading pool. It's nice,
It's
but
because it's really tiny. That's why it's
no diving though, bro. I don't want to, be wearing a collar.
So
Okay.
it's not, obviously it's not common in Greece to have a swimming pool. Do you guys have that
He's
filled like
living large.
only a couple months out of the year, or how's that work, Stelios?
No, you have like 4 months, full 4 months of summer, so you have plenty of time to use it. But the main problem here is that you get taxed if you have a proper built pool, or like a
Oh,
subterranean. The one which comes flush with the surface. Now we just
yeah,
sorted it.
like the ones that where we live, that's all the
Yeah,
only, we
exactly.
don't have out of above ground pools. That just doesn't happen here.
Yeah, well, that's what we can afford, so that's what we got.
Well, no, I don't think it's an affordability thing. It's more of a taxation thing. I mean, yeah, I mean, if the government's going to tax you on having a pool, no,
Yeah,
everybody here
yeah,
would be like, well, screw you. But, well, I mean, actually, I take that back. We're landlocked, so we'd say, all right, well, I guess that's a tax we're just going to have to eat anyway. But anyway,
yeah.
but you guys have the ocean. It's like, I can see the reason why not having a pool would be very it wouldn't be very popular, because you can just go to the ocean and go swimming
We like to have the choice of doing either.
yeah, well, I will have to admit that swimming in the Aegean Sea is basically like swimming in the pool. You don't have to worry about sharks. The water is gorgeous. It's
What's the
nice
water
and cool.
temperature?
It's probably like, if I had to guess, it's about 70 degrees.
Oh,
I don't know, but it's really warm.
Yeah,
that's
it's
warmer than 70 then, because that's what it is here in Southern Cal.
well,
On
yeah, maybe
a
it's like
good,
75. Yeah,
yeah,
it's
okay.
nice. It's nice. It's very pleasant to swim in.
Yeah.
But anyway, no, that's neither here nor there.
Yeah, let's swim in
This
the
is
market.
yeah. Let's talk about markets.
Swim.
Okay,
Think or swim.
okay. So with Pinkert swim, is that what you said?
Think.
Pinkert
Yeah,
swim. All right.
Pinkers. Yeah.
So what I was talking about the shallow, not the shallow pool, but the shallow euro dollar pullback is that we've moved to where I thought we were going to move to, and we're holding it. And so the longer we hold, so like you had mentioned, Dale, the longer in time you stay above these, support, previous resistance, current support levels, very shallow pullback, the more the risk is to the upside. Now, what I was telling the traders this morning, I'm not going to go through every major currency pair, and the reason why I'm not going to do that is because it's not fair to those people that are in the chat room, or those people that are that are ForexAnalytix subscribers, to have all the analysis. But I'll tell you what my setup is today. One of the main things that I'm looking for today is I'm looking for a continuation of the euro dollar higher. If, I have to give you if I see gold which also has a very shallow pullback, pulls back below 1400. What I'm looking for in gold, and keep in mind we're at 1405, is I'm looking for a push just below that support, just below the big figure number here, just to trip some stops, get people short, knock some longs out of the market. And as you can see, we have this intraday, oops, let me move this over here. We have this descending wedge. Which would be better known as in this market a pennant formation. So what I'm looking for is one more dip below 1400. You can see I have an alarm set here. I set that specifically because I want to know when we trip this. Once we go through this support, which is a 38% retracement, if we do, then I want to be notified that we might drop about 5 points. We drop another 5 points. I'm looking at A, buy gold, but B, sell dollars. And so you might ask, well, Blake, aren't you already, didn't you already, sell dollars and buy the euro? I did that yesterday. I bought the euro at 50.55, sold it at 82, and then I'm looking to buy it again. So I'm extremely bearish the dollar, and I'm extremely bullish gold. So I'm looking at these dips as opportunities to be a buyer of gold and a seller of dollars. So I'm hoping, and I may not be right here. I right in my assumption that we're going down first. We might just go straight up. Right now at this very moment, Trump is on Fox TV with Maria Bartiromo at this very moment. So he could say anything at any moment that could spark a rally in gold, or vice versa. So he could obviously sink gold too. So I'm staying on guard here, because the flip side of that is if we break back above like 1410, we're not going to dip. Gold's probably going to revisit the highs, or at least gun for those highs again. So and if that's the case, then the euro dollar, which has had a very minor pullback, and by the way, just so you guys know, the euro dollar range today has been less than 20 pips, or less than 25 pips, been 23 pips. Very tight trading range thus far. So a breakout in the euro to the upside could be pretty vicious, because we've had such a tight trading range. If we just expand our trading range 30, 40 pips to probably your normal ATR, which would be closer to 50 or 60, the euro dollar could be trading back above 114 again. So you have to be really very careful if you're long dollars or you're short gold at this point, because both have exhibited very shallow pullbacks. Don't ignore the fact that the pullbacks have been shallow. And if they've been shallow, that usually means, you guys hear me say this all the time, what does not go down usually only has one other direction to go. And that's, in this case, would be higher. So a couple things that are, hindering the euro is the cable. The cable still trades pretty heavy. One of the things that could help the euro here is the rise in the Kiwi. Now the Kiwi is pushing up against pretty key resistance. My nephew was visiting last night, picking up a couch from us, and of course he was here just as the RBNZ was meeting, which is unfortunate, because this Kiwi, that dip that you see down to 66 cents, that was because of a tweet. Somebody had thought that the Kiwi dollar or the RBNZ cut rates. They did not cut rates, but somebody thought they cut rates. The market acted on that, and I forget where I didn't catch where the tweet came from, but that was the reason why we spiked down to 66 cents and we reversed. And I was actually looking to buy dips last night in this. I was really, personally, I was thinking I was going to buy below 66.20, like just a little probe below this this downtrend line. You can see the downtrend line here. I was going to try to buy a little probe below that. If I was in front of the computer, I would have got filled, or I would have, I might have bought it at 66 cents. I might have bought it at 66.25. I don't know, but that was just a straight up opportunity to pick it up. Now, keep in mind, Trump is speaking right now. Gold is starting to spike higher. He says, praises Mexico for work on the border with the U.S. Okay. Let's see, what else is he saying? I'm listening to him through one ear here. Sorry, I'm just kind of trying to listen in to some of the comments here, but he's not saying anything that's of any real importance at this point.
Actually, while you're doing that, maybe I can take the opportunity just to make a comment about the RBNZ.
You can, yeah, go ahead.
I was saying yesterday in the chat room, I thought the risk was for the RBNZ to be dovish. That's why I took a small long in sterling Kiwi. As it happened, they actually were dovish. They weren't hawkish or anything, but the market clearly was already pricing it in. So right after the announcement that effectively they're going to cut rates in July, the Kiwi started strengthening, and this is just an example of what you might think will happen, and but you always have to somehow trying to figure out what the market's pricing. And that was, clearly not the greatest trade I've ever done. I got out for a small loss, but it does happen sometimes that what you think will happen happens, and yet the market goes the other way. But anyway, just a note to mention.
Thanks, Stelios, and sorry, I'm just watching gold here. Gold just took out that, or it's trying to take out that downtrend line. He's saying, let's see, it never ends on Mueller, but these are all older comments. Speaking of Fox Benderson, he was saying about China IP, and this is really the reason why gold is moving higher here, is because you can get from his comments that he's talking about China, and he's not really acting like he is going to roll over and die on this China deal. So my 2 cents was, well, as we approach this election season, that Trump was probably going to just try to get something done, but he is talking about intellectual property, and that's going to be a real big stickler for China, and gold is spiking up as a result. The euro dollar is going to start to make some headway here if gold continues higher. The dollar is under a little bit of pressure right now, and you have to be real careful with gold. Like I said, gold is. I mean, we just spiked $5 here, so I mean, one contract in gold, and that's $1,000 in your face. No, $500 in your face. Right there. I mean, it's starting to move. So, he's like, we have to get a good deal. I'm sorry, I'm just kind of listening through one ear. Let's see. He also says additional tariffs if no China deal. He's not going to roll over, and the longer this drags on, the stronger the case is for gold to continue higher as well. Dollar's coming under a little bit of pressure with the yen, and that's just signaling that the market's a little risk off here. As gold moves higher, dollar yen's probably going to pull back a little bit. Dollar's pulling back in general. So hold on. Maria Bartiromo is asking, what do you think China's going to do anything different than the last time when they reneged, meaning they went back on their words? So these comments obviously are fueling this move.
doesn't look like either side's gonna back down.
No, I don't think so. And you know what, Stelios, as this trade war intensifies, it's just, you know, you want to build the case for a, you know, 1600 price in gold or 1700 to complete this big inverted head and shoulder pattern. This big one right here, you know, the one that we blogged about. I mean, you know, you know, how can you be short precious metals or even long the dollar in this environment? It's really tough to do, other than, you know, scalping around. But, you know, yeah.
Excuse me, Stel, did you hear anything about, I heard there were threats against China to kick them off the SWIFT system?
I did not. No.
Okay, I heard that was floating around out there. That'd be a pretty major thing. You know, they're prepping for their own kind of SWIFT system.
Yeah.
They've been preparing for this.
Yeah, I haven't heard anything like that.
Okay.
To be honest, but then again,
pretty radical
move
if they do that. It's almost like war. You know, I mean, that freezes them out. I think some of their banks are having troubles too. I've been reading how they've been trying to support their banks in China, that there are issues with a lot of them.
Is there a market for that so I can bet against it?
Against what?
Happening.
Oh, the SWIFT system?
Yeah.
Oh, yeah. Probably there is. You could bet on anything, can't you?
That's true. If you, in the UK, at least you can, right, Stelio?
Yeah.
Oh, yeah.
That's like spread betting is like a way of life.
Oh, spread betting, man. I've done some of my best bets in my life in spread betting.
China wants to make deal more than he does. No,
it's the final 10%. That's the hardest one, right? Mnuchin said we're 90% there. Well, you know, until it's done, nothing's done.
Probably that shows some worsening because you know, I saw somebody tweeting it. There were some headlines at 13th of May that the deal is 95% done.
Oh, they lost 5 points.
Yeah.
Maybe they're talking about the DSI and bonds.
Trump just said China knows what the U.S. has to have for the trade deal.
Yeah. So we're about 3 points away or 2 points away in gold from making a higher high intraday. And here we are. We're running right into this resistance zone. Again, you guys, if you're short gold or, you know, just be really careful here. All right. I'm going to pass it over to you, Steve and Stelios. Everybody, I want you to wish you good luck today. You know, keep an eye on, obviously, you know, gold and the dollar is what I'm watching. I'm not too interested in the crosses right at this moment. So, you know, and good luck.
Thanks, Blake.
Thanks, guys.
Thank you, Blake.
Hello,
Okay.
Steves.
Hello, Dale.
The twins. Hey, hello, twins.
So, well, we talked about pretty much everything that's happened overnight. The New Zealand, the US. We did have, for people who follow it, like myself, we had Norway unemployment dropped. I mean, you know, unemployment, if it ticks up or down a little bit, nobody cares. But today's print went down from 3.5% to 3.2%, and that's, you know, that's quite a big drop. But just something to be aware of, and that's why the krona is a little bit. Probably that's why the krona is a little bit stronger. Oil is up as well, so that's probably playing a part as well. But apart from that, we haven't had anything in the UK today in terms of Boris Johnson and you know, the whole PM succession.
By the way, Stelio, in less than a minute, it's not anything really major. We have durable gold, good order. Why I brought here the data plus.
They can be market movers. They can be a market mover.
They can be, yeah. If we see something, you know, something significant out of the ordinary, yeah, they can be.
Yes, and what else? We have not much else today.
Yeah, in general, we've had, you know, a very quiet day, as Blake said at the beginning.
Yes. Carney was speaking earlier today. You know, he actually did do a small about turn. He did say that if on a no deal scenario, they might need to ease. Where in the past he had said that, you know, if that happens and the pound depreciates, they might have to hike. So there you go. Okay, let's see. 0.3 is better than expected. The revision is slightly worse. Trade balance quite a bit worse. So I think that's nothing. Is the market moving? Not really.
Let me say again. We had a little
Accident?
outage, actually. Okay, can you see my screen again?
Yes, I can. It's live, yeah.
Okay, Celio, did you see the data, by the way?
Yes, the data is slightly better than expected, durable goods, but the revision is slightly worse, and goods trade balance is about 3 billion
Yeah,
worse
those are
than
the
expected.
core durable goods. Look at the durable goods.
Yes, yeah, true. But you know, core durable goods is always the preferred.
Of course it is. Everything that's performing better or worse, depends on what you're looking, is the preferred. Like,
just exclude transportation out of every number, basically.
yeah. Okay, so you know, despite having a quiet day so far, we have had some decent technical events overnight. And you know, some of them we actually saw in advance yesterday. Specifically, I was showing yesterday the Aussie yen and the Kiwi yen, saying that I'm very skeptical with the two of them, but one of them was testing a descending wedge and could potentially break out, and the other one was actually breaking out of a descending wedge. And the Kiwi has had, you know, a very big day higher so far, and already reaching the first objective after breaking down from breaking higher, sorry, from this wedge, which was, as we mentioned yesterday, 72.25. So now what happens from there is quite significant, because if we also break this nice confluence of resistances, the 50 DMA is there, horizontal support resistance area, previous high as well. So in essence, you know, if we break above it, we're also going to have a higher high after, you know, quite a long period of time. I think that we should then extend even higher. So Kiwi yen is making the move. Aussie yen is making the move. The area I'm looking for, having to do with the Aussie yen extending higher, is at 76 to 76.20. We have that RSI divergence there as well. CAD yen is breaking above. We showed that yesterday, that it was once again toying around with this descending trend line resistance, and at the same time, it's time we actually draw here. I showed it yesterday without drawing, just by using my cursor, but I think today it's a good opportunity to draw using this. So as you see, this can also be interpreted as an inverted head and shoulders formation, right? Okay, the neckline was definitely, let's draw it better. You know, something like this, roughly. So CAD yen at an interesting juncture as well, possibly an inverted head and shoulders formation. And as I said, we've already broken above this descending trend line. So I think that, you know, the yen pairs are making an effort. Of course, you know, the main factor for that has been the nice rebound we've had in the USD yen. Actually, yesterday, we closed far away from the lows. We left behind the pin bar. Pin bars are, you know, notorious for being inconsistent, but anyhow, on occasion, they do work as reversal candles. And today, so far, we're seeing some nice continuation higher. Now, I wouldn't be overly enthusiastic. I do think that we need to break above 108, you know, before getting, you know, happy with potential upside. But given the fact that USD yen, and that is one of the things we mentioned yesterday, given the fact that it has been chasing bonds yields in all actuality, so, you know, the inverse of bonds, it's not unlikely that we're going to see a big rebound, simply because, as you see, the treasuries are still coiling in what can be an ascending wedge within this ascending channel. So we might end up breaking lower from here. And if that happens, then there is a decent chance that, first of all, from a technical perspective, you know, from a wedge, when you break down from one, you expect that at least you're going to fully retrace the wedge itself. That would point to a move back towards 126 and a half. But we might even pull further back to retest these ascending channels, the blue one here, support, which is quite a lot lower. It's roughly at 125 and a half. Okay, so no reason to jump the gun yet, because we are in quite a tight range. So it's not that we need any big move to actually confirm that we're breaking down. But if that happens, I think that the USD yen can potentially rebound even further, and by doing so, help the yen crosses perform much better for at least a short period of time, or more than a short period of time. Boons, by the way, as you see, more or less the same deal here. You can clearly see that there is a loss of momentum having to do with a move higher, and potentially this can also prove to be some type of a wedge. So we might finally see some kind of a pullback. Now, I would be treating those pullbacks as corrective pullbacks, but even so, there is a decent potential for a move lower, that might last from several days to even a couple of weeks, right? So I do think that those developments in the yen pairs and potential developments in the boons are worth keeping a close eye to. Now, having to do with stocks before we go to the rest of the FX pairs, and I want to focus on the crosses once again, is what's happening with stocks here now. We've had a decently weak day yesterday in the S&P, quite a weak day, undoubtedly. Now, does this turn me bearish? Not really. I mean, the fact that we got rejected from the previous high doesn't make this a double top in any case, because, in order to view it as a double top, we need to move a lot lower than this. So I don't think that there is any reason yet to, refrain from being constructive. Specifically, I even took a position myself here in the DAX. We were breaking higher. We're still above it. Actually, this pennant here, as you see on the 4-hour chart, and I do think that, there is a very, very decent risk reward against the lows for a move to at least retest once again these highs. So I think that stock indices still look more than decent for a move higher. Now, what I want to focus on again is the euro and the pound crosses, and let's begin by having a look at the euro pound. So the euro pound retested the highs today, the previous highs today. It seems to be losing momentum once again, and I would caution people from being overly enthusiastic here about the long side, because first of all, we still exhibit RSI divergence. Second of all, this has been an area of support resistance multiple times in the past. Third, and most important, is that just a few pips above, like 50 pips above, not even, we have this descending channels resistance. So I would be very, very careful here. I still think that there is a decent chance that euro pound is going to roll over to at least produce a deeper correction. I mean, I'm not doubting that this whole move has very corrective characteristics, so I wouldn't be surprised at all if we eventually break higher in this from this euro pound consolidation and actually extend quite a lot higher. But after seeing this move from like 85 cents to 90 cents, which, for the standards of euro pound is, quite a significant move, and, momentum was quite strong, I would feel much better if we first, pulled back and then eventually broke higher. So I still believe that euro pound shorts against this trend line are a good risk reward opportunity. They do offer a good risk reward opportunity. Now, it doesn't mean that it's going to work out, but I think it's worth taking a risk here. Now, one more thing that I want to show yesterday before I continue with the more popular euro crosses is the fact that we've actually broken down from the recent range that we had in Euro Swiss. Euro Swiss was actually confounded in this 111.70.80 to 114.50 range since August of last year. So it was almost a 1 year consolidation, but we've now broken below it. So keep in mind that is a development that is worth noticing. And the next area of support for the pair is at 110. Now let's go to Euro Aussie, Euro Kiwi, Pound Aussie, and Pound Kiwi. Euro Aussie turning lower. So far, not so clean what it's doing here. This might also be part of an expanding correction or whatever. So, I wouldn't be so bearish yet, although the fact that other correlated pairs do show weakness would make me very skeptical in being long. But in any case, we shouldn't see it below 161 because then, it's in trouble. Now, Euro Kiwi, as you see, has been turning lower much more aggressively. And that is one of the reasons I would be very, very skeptical about Euro Aussie as well. Especially if we take out 169 here, I think we're going lower. But as I mentioned the previous days, the more significant developments have been in the Pound Aussie and Pound Kiwi because both of them had a much more clear structure having to do with the recent rebounds and they show to be corrective. You can see we had like an expanding triangle as a corrective rebound here in the Pound Aussie. We've broken below that trend line and now we're threatening of breaking below this horizontal support area and the 200 daily moving average, in which case I do believe that we're going to extend lower from there and perhaps even significantly lower. And the Pound Kiwi, I mentioned that yesterday as well. It's quite weak. If you remember, many days ago we drew that this 194 area was a key area. It was a juncture. The pair would either fail from there and continue lower or extend higher. So we did fail there, and we're now extending lower. And I do think that there is more downside to come. If you want to keep your eyes on the big picture here, keep in mind that the Pound Kiwi has been moving higher since summer of 2016. So that's like a 3-year-old move higher within this large ascending channel. So I think it's quite possible that we're going to extend lower to retest this channel support, which currently passes roughly from 185. Okay, so all of them worth monitoring. As I said, I prefer the pound ones, and I'm actively looking to short them at any given rebound that will make it worth from a risk-reward perspective. Hi, Steve, could you also mention Euros and Euro Kiwi? Yeah, I hadn't seen your question, but done. Forex Gal is sarcastically asking if Greece has taxes. Actually, Greece has suffered from many years of socialism, and as it happens with many countries that have a lot of, it's not a socialist country, but it has a lot of elements like France, for example, or whatever. Yes, it has very high taxation, unfortunately. Very high taxation, actually. Let me see the chat as well and see. Trump says if he decides to place additional tariffs on Chinese products, it could be 10%, not 25%. I guess that's probably, bullish, let's call it. Sorry, going through questions. US stock index futures jumped Wednesday morning after Steven Mnuchin told CNBC that the US and China were close. Yeah, we've already mentioned that. S&P 500, we've already had a look at it. Potential daily evening star formation in gold. Yes, I agree with you. Let's go to the metals, actually, because I did want to speak about them. So, yeah, I do agree with you. I do see that potentially we might have a deeper corrective move here, but we need to see how today is going to close. Yes, potentially we can have an evening star formation today in gold, but in order for that to happen, gold will have to close at or below the middle of this candle, not yesterday's candle, which was an indecision candle, but the day before yesterday's candle. Okay, so Monday's candle in essence. Now, if we do close below the middle of Monday's candle, then yes, we're going to have an evening star formation in place, and that could potentially point to a deeper pullback towards like 1360, 1365. In any case, I would still be looking to buy the dip. As I've mentioned multiple times, I am actively looking to buy the dip, and this is not a fresh idea that I had about it. I gave an interview months ago, this one, gold short-term bear, long-term bull in Real Vision. You can see this. So I gave this interview on Real Vision when we were actually trading here, somewhere here. And I said that I'm looking for lower prices in gold towards this area before then seeing gold move higher towards 1360 and potentially, even to new highs. Now that we've had this major development, the breakout above 1360, I definitely find no reason why I should be trying to fade this. As I've said multiple times, be careful. You might make some money trying to fade recent gold strength because we might even pull back to retest this. But my main case scenario remains that we should see a continuation higher. If not from here, possibly from a little bit lower. But in any case, I do think that 1360 is going to prove a very, very tough level for the bears to break, because I do think there's going to be a lot of buying interest gathered up there. Blake used to call this, and I know that many of Blake's old listeners are listening into our webinars. He used to call this a blue light special, like, when something was, on sale for a great price, right? So I do believe that if you see gold at 1360, that's a, damn great opportunity, and you should probably be buying it. Okay, now silver has already retraced most of today's losses by back testing. I wrote that at the end of week analysis as well, that 1510 is support from this point on. Actually, we went and retested this zone, and we seem to be holding for now. Today, actually, as coach showed, today silver finally, after a long period of time, is overperforming gold. Of course, I'm not saying that you should be looking to short the gold-silver ratio, because just by having one-day pullback doesn't really mean anything. I mean, it's trading at prices that we've only seen once before in the history of the two metals. We've only been, for a short period of time higher than where we currently are. So we almost made it to 93 yesterday, and the all-time high is at 100. A little bit lower than 100. But in any case, silver is overperforming today, and you can see this on the chart because we held this support. So be careful. There is no guarantee that gold is going to give you the opportunity to buy it at 1360. And, at any given point, with any given headline, gold might actually find buyers within like 1 or 2 days of a corrective move lower, and not look back again. And we might be trading, next time we talk about this, we might be trading like 40 or 50 bucks higher. Okay, so be very, very careful. As I said, don't try to fade such a major technical development as the one we have had. I've seen many people in the chat room, and even more people on Twitter, trying to fade gold strength. I think it can prove to be quite unhealthy for your account. Okay. We have a friend here mentioning, Glenn actually, mentioning that Nikkei is interesting. And yeah, let's have a look at it, because we haven't had a look recently at what the Nikkei is doing. I've had a reason for, not going through it for quite some time. And the reason is because it's not easy to interpret this price action. When we first dumped lower there, I was pretty sure that this is a triangle, which should have produced a lower low. That happened. I would have expected actually a bigger extension than the one we had, but you know, typically speaking, we did fulfill the minimum expectations, which was, you know, another thrust higher from the triangle and one more move lower. Then we had a nice morning star formation, and now we've been moving higher, but the way in which we've been moving higher isn't showing an impulse. And in general, if you zoom out and, you know, have a better look, you'll see that in essence, the Nikkei has been without trend since 2017. Okay, so in all actuality, I would have to tell you that Nikkei is probably one of my last choices to trade from the stock indices. I had no problem being long today buying the DAX, but in all actuality, I would find it very hard to say buy or sell the Nikkei here. Now, yeah, against like 20,900, from a risk reward perspective, I could tell you buy it for a move, you know, towards 22,000. But, you know, it's not something that I feel confident enough to even consider doing it myself. But just if somebody is really looking to do something with it, you know, that's the best advice I could give if I had to give one, which I'd rather not for Nikkei because I don't have a clear view, as I said. Crude, yeah. Thanks for reminding me. Actually, crude is worth looking at every single day now that it has been, you know, producing significant moves. And it's worth having a look at it both on the daily and the 4-hour chart. And actually, speaking of which, let me start by having a look at it on the 4-hour chart. So, two things to notice here. Crude today, and you see it's been testing this level again and again, has fulfilled this rectangle's target after breaking above it. So, you know, whenever you break above or below a rectangle, which in essence is like a horizontal range, right? Like the one we had here, the target is always like the height of the formation added to or subtracted, you know, depends on which side it breaks, from the breakout trend line. Okay, so that one was actually, in this case, at 58.84, as you see. So we've now reached and tested that. We are also just a bit above the 50% fib. And if you have a look at it on the daily, you'll see that at these levels, we're actually testing also the 200 daily moving average and the 50 daily moving average. Bottom line, I would be quite skeptical buying crude here because there is a decent chance that crude is going to pull back from here, in my opinion. Now, does this mean I would be shorting here? Probably not, because I'm still not convinced that crude is done rebounding higher. I think that even if it pulls back, we might see one more leg higher before we see a continuation lower. But if I had to do something with crude now, I would probably risk shorting it for a short-term trade. Okay, so, you know, gun to my head, as we say on occasion, I would probably fade the strength for at least a short period of time. Okay. Now, one thing that we haven't had a look at yet, and I do want to look at, is the DXY. And where is it? There it is. And here's the DXY. The reason I want to have a look at it is because, as you see, the DXY is backtesting this horizontal support resistance area. And keep in mind that even if we penetrate through it, then a little bit higher, roughly at 96.60, we have the 200 daily moving average, and just a little bit higher than that, we have this broken ascending channels support that might act as a resistance. Bottom line, I think that selling a dollar rally anywhere between here, you can scale in, for example, and like 96.70, 96.80 is probably not a bad proposition. Okay. And, you know, as I've said multiple times during the past 2 days, I'm actively looking to sell any dollar rallies. Okay, that hasn't changed. And if it does, trust me, you're going to know. Let me see. Our friend Ben here is sharing an article about Chinese banks tumbling after US threatens to cut them from the US financial system. So it was what the coach was talking about. Forex Gal is asking how Maria is looking. Probably she's looking quite good. Let me see if we have any more questions. Coach, I'm guessing we have an interview today, don't we? Same time. Let's visit here copper. Copper, as you see, the reason I want to show copper is
I thought we did.
and by that you mean that you thought we did, but as it seems we don't?
Yeah.
Oh, we don't.
There's 5 minutes left, but I'm not getting responses from the Wolf of All Streets.
The Wolf of All Streets. I like that handle.
Yeah.
Interesting.
It's not he used his name, but looks like a ghost. A little ghosting action here. Stage fright? I don't know. I'm usually pretty nice to people. I don't grill them. Huh?
He's lost if that's the case.
Yeah, that's the way. Should I block him?
Nah.
All right.
It's not your style to be vindictive.
Okay. I don't know. One of my favorite Seinfeld episodes. You ever see that show?
I've seen a few episodes,
Okay.
and unfortunately, I didn't give it enough time to, to get under my skin.
There's still reruns. And anyway, George Costanza is one of the characters, and one Christmas show, he said, "What happened to that old Christmas spirit? An eye for an eye." he had the books confused a little bit.
A little bit, not a lot, just a little.
Yeah, that's a little Old Testament. Yeah, where is that Christmas spirit? An eye for an eye. Anyway, it looks like it's probably not happening, Steve.
By the way, we have a question from Glenn. What is happening with Bitcoin? And the answer is very simple. Bitcoin is going vertical again, as simple as that. Next area of resistance I see here is the 13,350. Keep in mind, momentum is extremely strong. We've started out, by momentum being quite weak, and now we seem to be accelerating, and the same deal is the case with Ethereum. Ethereum, keep in mind, nice confluence of resistances at 360. I was actually long Ethereum for a period of time. I made a very good trade here. Of course, looking back in retrospect, the fact that I made 10% doesn't look, that much.
I did the same thing, Steve. I bought a Royal Trust, a GBTC. It's a trust on Bitcoin for $4. Pitched it at 7. It's 14 now.
Yeah. So, regardless, keep in mind that both
great hold.
Yeah. From a technical perspective, they look quite bullish. There's no question about it. So, you need to respect the strength of it and forget about the fundamentals, because, if you trade on fundamentals, you'll probably go poor. I know that because I wasted one year of my life as a trader trying to trade fundamentals because I was confident that I understand them quite well, until I gave up several years ago, realizing that if you want to trade with fundamentals, you have two choices. One, taking year-long positions. So not just being patient, being extremely patient and having extremely low leverage and very, very big account. Otherwise, you can't make a living by trading in this style. And the second one is to just forget about fundamentals and just use them for confirmation. If you happen to be on the right side of the trade, from a macro perspective as well, even better. But definitely, I'm not looking to trade on fundamentals. If I did, I would have been short Bitcoin until the sun, when
stopped rising in the east.
Exactly. Which, to be honest, the sun rises from the east only twice per year, Coach.
Really?
Useless information of the day. Yeah, absolutely.
Huh? Where does it rise
from? By east, I mean 270 degrees. I mean exactly east. You know what I mean?
Yeah.
So the sun rises and sunsets exactly at west or east. Only twice.
Sunrise, sunset, sunrise, sunset. Slowly pass the years, one season following another, laden with happiness and tears. Fiddler on the Roof.
Okay, I'm with you there.
Anyway, all right, buddy.
Palladium still performing quite well. Another one I wanted to show. So that's it. I think, I've covered, the vast majority of the things
Like
people want to
always.
know about.
What do you think about a crude short right here, Steve? Before you go.
Oh, you were probably away at some point. I spoke
Oh.
about it.
Oh,
Yeah.
okay.
I said that from a risk-reward perspective, it looks appealing.
Yeah, okay.
It looks appealing.
All right.
But I would be careful because I think that even if we pull back, there is a chance that we have another leg higher.
Okay.
So
56 viable if we pull back?
Oh, yeah.
Okay.
It is. It is.
All right.
It is.
Okay. All right, buddy. Well, that's a wrap for us. Tomorrow we have a guest who I'm like 99% sure will show. And actually, his name's Garrett Patton. And the last time Garrett was on, gold was well under 1,300, and he had a pattern that took it above 1,400. So it's going to be interesting to see where his head's at now. So
Yeah,
we'll see
indeed.
everyone for investing.com Thursday, tomorrow.
Absolutely. Sounds
And take the opportunity to become part of our trading community. And after face ends, go into the chat room, hang out with the guys. Surround yourself
And
with
the
traders
girls.
better than you. Oh, yeah, and Amanda.
I'm actually happy. No, we have a decent amount of women in
Yeah.
that room, and I'm very happy about it.
Yeah, I know you are. Although I know, Stelios is your favorite. Anyway.
Yeah, she's my favorite woman. I will admit to
that. Everyone have a good day hunting. Remember, don't just count your pips, count your blessings. And thank you, everyone, for hanging out with us every day. Hope that we're adding value to what you're trying to accomplish as a trader. That's a wrap. Take it easy, Steve.
You too, Coach.
Okay, buddy. Talk to you later. See you, Warriors. Adios.